Hello and welcome to the Stock Planner channel. This is my hometown in Virginia. It's a very small main street, very beautiful, very clean, but this is a dying town. There's some businesses that are open and some businesses that are not. But tonight I would like to talk about PayPal. PayPal is a payment processing for the world. Small business there. And all these small businesses accept PayPal, especially if they're doing some online sales. They do sell popcorn here and ship it out. They use PayPal. And now I've never tried using PayPal for auto repair. I imagine you can use it. Anyway, for these businesses to survive, you're going to have to adapt. And accepting online payments is one of those ways to adapt. Let's analyze PayPal. But before we do, I want to say, don't ever take advice from anybody on the internet. Do your own due diligence. It's a clothing shop, ladies' clothing shop, and that's going to be hard. You don't see anybody walking around this town. It's pretty empty. It's going to be hard to stay alive unless you do some online sales. Very nice store of your ladies' store. And this is a ladies' gift shop. Very nice as well. Jewelry, trinkets, clothing. Across the street was a novelty food store. All those need to accept PayPal, but never accept advice from anybody on the internet, especially me, and do your own due diligence and learn it and become successful. Walking across to the local newspaper. This paper made a lot of money in its time. The Gloucester Gazette. The Gloucester Gazette. Let's get started. The job of a swing trader is to catch these swings. Just swing down, then it switches regime change, and now it's going up. And that's a nice long trend, and then it switches regime or trend down. And if you could find indicators that predict that, like the MACD, that would have predicted it here, or here, being a little early. If I'm saying there's going to be a regime change over here, we haven't seen a green dot, so the MACD is not saying anything. Or the stochastic RSI coming down below the 20 and coming back around, that would have predicted it right here. And the RSI, this would have predicted it early, but you usually have to wait for it to come around, and I usually like to wait for all three indicators that come within about 4 bars of each other, picking a trade. Swing trading, you don't have to be jumping just right in on the minute. That's what I like about it. I can come in after mowing some grass and check my signals and place some trades, and then go back to my work. I have a business, so I need to tend to that. It's a small business. Like I showed you earlier, it's an antique business, and we accept PayPal as well. As a business owner, we've used PayPal for many years. Sometimes I don't like this rules. So drawing a Fibonacci, I always like to do that to see if I can gauge where this thing is going. From the last print, and that's here, it's going down, and it's the zigzag. This is a zigzag. It's a perfect indicator. It always predicts the right. It shows the right trend, but it does that because it's looking to the future. It looks to the future. Right now, this downward bar indicates that, hey, this is a downward trend. Well, I know what it's doing. I usually like to take a trade when it doesn't know what it's doing. Right now, it does. This is a print in earnings today, and you have to ask yourself, is PayPal coming down to below the 50, or is it coming down to the 50 and then retrace itself back up? If we had and said the 50% retracement is right here, and then we had the regime change, the price did go back beyond the 50% retracement level. That's what I like to use. I like to use the 50% to predict where it's going, because oftentimes what you have is a trend, pullback, and then resume, and it oftentimes pulls back to the 50%. So this one, it was 50% on this right here, and then it pulled back, and once you decided that it was a change, you could predict reasonably that it was going to at least go to here. Now, could you predict this? I don't know. So, looking at the 50% here, it's right here. Do we think it's going to go down to the 50% and then shoot up? Very well could happen. Do I think it's going to go below? This stock has been trending strongly up, and for strong trending stocks, they pull back a little bit and then resume the trend. So, if I was going to go ahead and try to find some kind of level, it would be 271 or 280. currently trading at 283. So I could wait, I could buy the stock here at 283, or wait to 271. That's some distance yet. Let's see if there's another way. Looking at PayPal and looking at a bull put spread, which we're saying that we think it's going to go up. This is a bullish play. And we're saying it's going to go up from 285 on up in this particular instance. So what I would like to do is that I would like to set this play to be September 17th, see what I get. But I also said that I would like to have it at least 280. So I'm going to move this leg down to 280, and I want my margin to be about 500. Okay, so let's set this up. The first thing you do is you go into bull and you hit bull put spread, and you can see that this is a bullish play, and it's a vertical spread, and that we sell a put and we buy a put at a lower price, and then that's the spread, and that's what our net credit is. Let's move this down to 275 and move this up to 270. 270 minus 275, that's $5, and that's our 500 margin. We want to do this out to September 17th. Nothing there. Let's move it out here. Nothing at September 7th. So September 10th, and we want to collect at least 1/3 of the width. So that's 1/3. So we have to put up $500 to make $185. Our max loss here is this minus this equals this. And as long as the price stays above 273, that's good. We'll go check this out in a minute. 273, we win something. And if I think it's going to pull back, at least fill the gap, we can win these things. And I usually like to look at this after 10 days. So somewhere in here, I'd like it to be above 273. And what I usually like to do is set my profit target at half of this, 50% of that. 273. Let's remember that. 273 is somewhere in here, and we have about a month and a few days, and we want it to be up in here somewhere. This is the gap that happened today, and that's based on earnings. And what happens is with a gap is you tend to fill it. 291 is the fill, at least, well, 292, 293, 293, and if it gets it there in about 10 days, which I think it will, let's see what our profit will be. 293, about 10 days, $100. So the question is, would you risk $500 to make $100, or $500 to make $185? But that's not really the question. Would you risk $300 to make $100 or $185? If you hold this thing out for the whole term, you can get your $185. But I mean, I don't like to use to do that. If I'm starting to win, especially in this market here where it fluctuates around, if I'm starting to win, I like to take the winnings when they're worthwhile. And investing and risking $315 to make $100 is worthwhile to me. What do you think? This is an intermediate option play. It's a bull call put spread. It's a bullish play. It's relatively easy. You can do it with any account. You just take it and sell this and buy this. And the difference is your net credit. The difference times 100 is your net credit. And that's put in your bank account right away. And you can actually use it for loan value. Is it coming up here, 293, or is it going to continue down? Will it stay above 273 or end up below? That's the play. That's the bet. Do your own due diligence. What do you think? Is this worthwhile? Please leave your comments below. Please like and subscribe. Do your own due diligence. Don't take anybody's advice. This is not advice. If you follow me, you're crazy. But you can learn. Catch you on the flip. Happy trading. My trading has gotten better since I started doing these videos and sharing my ideas. Thank you.